Good morning, ladies and gentlemen. At this time, we would like to welcome everyone to Arauco's third quarter 2025 results conference call. Today, we have with us Mr. Gianfranco Truffello, CFO of Arauco, and Marcelo Bennett, Corporate Treasurer of Arauco. We would like to inform you that this event is being recorded and all participants will be in a listen-only mode during the company's presentation. After the company's remarks are completed, there will be a Q&A session where you can find the link in our reminder email. Before proceeding, let me mention that this presentation contains forward-looking statements that are based on the beliefs, assumptions, and expectations of the management of the company, based on currently available information. They involve risks and uncertainties because they relate to future events or expectations and therefore depend on circumstances that may or may not occur in the future. Investors should understand that general economic conditions, industry conditions, and other operating factors could also affect the future results of Arauco and could cause results to differ materially from those expressed in such forward-looking statements. For further discussion of these risks and uncertainties, investors should refer to quarterly and annual Arauco filings with the Chilean CMF and US SEC. The company undertakes no obligation to publicly update or revise any forward-looking statements due to new information or future developments. Now, I'll turn the conference over to Mr. Bennett, Corporate Treasurer of Arauco. Marcelo, you may now begin your conference.
Okay, thank you, Jose Manuel, and welcome all to this conference call regarding our third quarter results. I will start with the highlights of this quarter in terms of revenues. Our revenues were around $1.5 billion, very close to what we had in the last quarter. Our net income was $0.2 million, 100% less than the last quarter. Our adjusted EBITDA, $281 million, nearly 27% less than last quarter. In terms of the last 12 months EBITDA, was $1.4 billion, nearly 25% less than the last quarter. Our net debt to EBITDA, 4.83 times. And in terms of the progress of our Sucuriú project, we registered an advance of 25.7%. In terms of our EBITDA and income statement, we will express more in detail. You can see the evolution of our adjusted EBITDA, in which we show that the last EBITDA, as I mentioned before, was $281 million with a margin of 19%. The breakdown by division is pulp and forestry, $193 million, $118 million of wood products, and minus $29 million of consolidated adjustments and others. In terms of the evolution of the EBITDA, is mainly explained by $66 million in pulp and forestry of less EBITDA, $20 million of wood products less EBITDA, and 15.7 in consolidation adjustment and others. In terms of our income statements, mostly explained by a less gross profit of $84 million, another income of $63.7 million, and the rest of the accounts with less variations. In terms of our revenues, decrease around 1% compared to the second quarter and 11% compared with the same quarter of 2024. This was expressed and explained by pulp revenues of less $4.5 million or 0.6%, mainly because of less pulp prices. In terms of wood products, revenues decreased also nearly $11 million because of less average prices. In terms of cost of sales, increased by 6.3% or nearly $69 million compared to the second quarter, mostly explained by an increase in timber and depreciation and amortization. mainly related to higher cost of Arauco Line 3 and Valdivia Mill. Also, we show on the graph that the pulp unitary sale cost of softwood bleached pulp decreased 4.4%, the hardwood bleached pulp increased 1.1%, and bleached softwood pulp less 7.6%, and dissolving pulp higher in 13.3%. This is mainly explained by the stoppages that we have in those mills. Going to review by business segment and the outlook, we start with pulp, in which you can see the graph that shows the evolution of pulp prices in China and also in Europe. You can see there that prices have been more stable in the last month, and we continue showing a gap between short fiber and long fiber of $145 in the case of China. That compares with $100 in the previous quarter. In the graph that we have in below part of the slide, we show the stocks, and we see some stability in inventories for long fiber and also short fiber. Going to an EBITDA, as I mentioned before, we showed an EBITDA that it is nearly 26% less than second quarter of this year, and 43% when we compare to the same quarter of the year 2024. During this third quarter, inventories began to increase following seasonality due to summer in the Northern Hemisphere. Oversupply persisted across all markets. However, despite this situation, there was a rebound in short fiber prices toward the end of the quarter. In China specifically, demand remained stable despite oversupply. The printing and writing industry struggled with oversupply limiting price increases, while the tissue industry remained stable. Regarding prices, long fiber decreased slightly throughout the quarter, while short fiber increased toward the end of the period. In Europe, demand showed signs of recovery, with short fiber prices slightly recovering toward the end of the quarter, which caused interest in securing volumes in some clients. The printing and writing industry remained challenged, causing producers to reduce output to maintain prices, and additionally, tissue export from Brazil and of printing and writing and packaging papers from China increased as the tissue industry improved slightly towards the end of the quarter after seasonal low demand. In the case of dissolving pulp market, the viscose market showed oversupply. However, the textile pulp market remained stable. In terms of production, during the third quarter, decreased by 8% compared to the same period in 2024 and decreased by 9.4% compared to the second quarter, mainly due to Arauco Line 3 shutdown and an operational incident in the Valdivia Mill. In terms of the outlook for this fourth quarter of 2025, we see in China domestic demand remains stable despite the persistent oversupply in pulp and paper, as a return of a main producer has added additional pressure to the market. Short fiber prices seem to have reached their lowest point 2 months ago, and no meaningful recovery is expected in long fiber in the short term. Pulp inventories of pulp producers remain under control. In the case of Europe, no signs of demand recovery are expected, although we expect sales to remain stable. The printing and writing and tissue industry are likely to continue at current levels without showing signs of improvement. Toward the end of the year, many paper companies typically shut down operations for a few weeks, which is normal for that period. Uncertainty, of course, and concerns remain in the implementation of tariffs by the US, and the risk of trade conflicts with other countries, of course, puts more uncertainty for the industry. There you can also see our plan for pulp mills stoppages in the coming quarters, and you can see the evolution of prices as of October 25, in which you can see a small increase in the case of short fiber, and the dissolving pine remaining stable. In the case of wood products, adjusted EBITDA, you can see there, as I mentioned before, the decrease compared with the second quarter of 14.6%, and also a decrease when you compare with the same quarter, the third quarter of 2024. In terms of the different subsegments of this business segment, in the case of wood products, you see some decrease in terms of volumes and also in terms of prices. In the case of panels, a small increase in volume, but decreases in prices. In the case of some timber, small increases in terms of prices, but continue decreasing in terms of volume. In terms of production and sales volume in our wood product segment, you can see that we are showing production and sales very stable when you compare with the last quarter in terms of panels, in plywood, and a decrease in sales in sawn timber and an increase in remanufactured wood products. In terms of the outlook for wood products, 47% of our volume is sale in North America, and we see the MDF market remains challenging with oversupply and persistent price pressures. It is a market that, of course, is suffering the consequences of the uncertainty and the plan of tariffs for imports products. In particular board, the market is expected to remain difficult with low demand and tariff uncertainty, as I explained before, complicating forecast. Plenty of supply, holding prices with a stable volume. In terms of remanufactured wood products, we anticipate a negative trend for the rest of the year, with uncertainty leading buyers to keep inventories low and housing starts remaining weak. On the supply side, slight advantage due to higher tariffs on Brazilian products. In the case of plywood, demand is expected to remain stable with limited supply. Prices are likely to stay flat. There you can see also the evolution of the US housing starts, that we see that it is a little bit stable in the as it has been in the during the whole year 2025. In the case of Central and South America, which represent 42% of our sales, Brazil, the market is expecting to remain solid, supported by a strong particular board demand. MDF segment is well balanced and shows stable prices. In the case of Chile, mixed conditions, stronger particular board and melamine demand contrasted with continued weakness in MDF, pressured by high import supply and a slow molding market. In the case of Argentina, the market outlook remains positive through year-end, supported by a strong local demand for MDF and particular board. Supply conditions are stable and sales are expected to close the year on solid ground. Going to our financial statements, in terms of our cash and liquidity, we show a cash position of nearly $1 billion at the end of the third quarter. In addition, we have a revolving credit facility for a total amount of $450 million due in September 2027, which as of the date of this report has not been withdrawn. There you can see that our cash and liquidity position is around $1.4 billion. In terms of our CapEx, during this quarter, capital expenditures on a cash basis were nearly $900 million, of which $400 million higher than the previous quarter, mainly explained by the anticipated payment of wood supply agreements related with the Sucuriú project. There you can see that in the third quarter, we have $530 million of CapEx and for the Sucuriú project and nearly $370 million. In terms of our free cash flow, cash flows from operating activities increased nearly $92 million, mostly due to the net effect between working capital variation and interest payments. In terms of cash flow used in investment activities, increased $437 million, mainly due to an increase in CapEx related, of course, with our Sucuriú project. Cash flows used in financing activities decreased by $33.9 million due to the dividends paid in the quarter before. In terms of net debt, increased $425 million or 7%, mainly due to the negative free cash flow. In terms of our net financial debt, there you can see the evolution of the last quarters. As I mentioned before, in this quarter, we end the third quarter with nearly 6.9 million of net debt, which considering the EBITDA of the quarter means in 4.83 times as a leverage ratio. In terms of our debt profile, you can see that for the rest of the year, we have bank obligations of $187 million for the rest of this year and $98 million of bonds, and the rest of is the evolution of the debts that you can see there divided in bonds and bank obligations. Going to our material facts of this quarter, first mention the completion of the 2.2 billion financing of Sucuriú project. As you may seen that in the press and some media, on August 21, 2025, Arauco announced the successful closing of 2.2 billion financing of Sucuriú project. The allocation is divided into 1.25 billion loan co-led by IDB, Invest, and IFC, with the participation of 8 commercial banks, and nearly 1 billion in an ECA financing warranted by Finnvera. The participation of multilaterals and an export credit agency, of course, enhances engagement of technical advisory on climate, social, and value chain matters. Sucuriú integrates biodiversity monitoring, clean energy generation, water stewardship, and responsible forest management, channeling resources through a social environmental strategic plan to contribute to health, education, housing, conservation, all while aligning economic growth with environmental responsibility and social inclusion. Additionally to this financing, at the end of October, we had the company issue a hybrid sustainable bond in the Chilean market for a total amount of 20 million UF, which is approximately $844 million. This historic transaction represents the largest corporation bond ever issued in Chile. The bond was priced at a rate of 3.97% with a demanded volume of 1.75 times the issued amount, reflecting the strong investor confidence and support not only in the company, also in the challenges and in the projects that we are facing in the near future. This is Arauco's first hybrid bond. The instrument is subordinated to senior debt and allows the deferral of interest payments at the company's discretion and cannot be redeemed before the 7th year. Due to this structure, rating agencies classify it as 50% debt and 50% equity. The bond has a final maturity of 32 years and 3 months, reaffirming the market's long-term confidence in Arauco's financial strength and sustainability strategy. Another important event of this quarter is that PwC Chile Innovation Award, in which Arauco was recognized by PwC Chile with the 2025 Innovation Award, Empresa Consolidada, for Glony, a new hybrid Eucalyptus nitens by Globulus, combining fast growth, tolerance, and strong wood properties. The initiative aims to strengthen sustainable forest management and contribute to climate change mitigation. As our CEO, Cristian Infante, noted, GLONI reflects Arauco's purpose by delivering a more productive, climate-resilient species and extending advanced technology to small and mid-sized forest owners through Bioforest, the company's research and development center with 35 years of impact. Finally, just to give you an update of our Sucuriú project, the Sucuriú project progress is according to schedule, reaching physical progress of nearly 26% as of September 2025. Regarding capital expenditures, a little bit more than 1 billion has been disbursed as of the date. Mechanical erection works began, which includes the pipe racks and boiler steel structure. Additionally, construction also started on the turbo generators building, cooling tower, and administrative facilities. For more information, you can visit the web Proyecto Sucuriú. And now for you to see the advance of the construction, we are going to show a video that shows the state of the construction of as of October 2025. And finally, our takeaways from this presentation is first, the uncertainty remains in some markets, as you all know, due to the implementation of tariffs in the US and the effect of trade conflicts with other countries. In terms of our main project, the Sucuriú project, we have a current physical progress of nearly 26%. Construction began on mechanical erection works, turbo generators building, cooling tower, and administrative facilities. And also highlight that we are expecting that the ramp up is gonna start in fourth quarter of 2027. Arauco completed the largest corporate issuance ever in the Chilean local bond market, placing a hybrid sustainable bond for $20 million US, approximately $844 million. In terms of our next conference call, regarding the fourth quarter results of 2025 is going to be during mid of March 2026. Now I pass to Jose Manuel.
Thank you, Marcelo. The floor is now open for questions from investors and analysts. If you have any question, please follow the link. Okay. The first questions comes from Juraj Domic from La Rainvial. Could you please provide details on the $530 million non-Sucuriú CapEx? What portion was for water supply payment? Is there another payment in the short run?
Yes, thanks for the question. Yes, in those $530 million, they are included the anticipated payment of the forestry contract that we did with El Dorado. The contract was for about $600 million, and we paid half of that, so $300 million during the quarter. So the basic explanation for that are those 300, and they're also included there forestry plantations done through the quarter, which is normal, and some other CapEx, business as usual CapEx main of other mills, and also the CapEx related to the project Vikingo and the OSP project in Chile. So the basic change from other quarters is the $300 million that were spent at one time for the El Dorado deal. The rest will be paid as we harvest the forest. So basically, during the first 2 years of production of the mill, so 28 and 29 mostly.
Thank you, Gianfranco. Next question is total financial debt increased by about $500 million this quarter, and leverage reached 4.83. What measures are you taking to manage leverage?
Well, yes, the debt went up because of the negative free cash flow, and the negative free cash flow was mainly because of the big CapEx spent through the quarter. Explanation, of course, is the Sucuriú industrial investment, but also this payment of advance, let's say, forestry fiber that we bought. The measures that we're taking are various, and of course, we issued this hybrid bond of about $800 million. So half of that will be accounted for equity, so 420 something at the end of the year. For rating agencies perspective, it won't be accounted as equity for accounting perspective, but as of the calculation of rating agencies, we will have $400 million less net debt. And we are also planning to do some sales of standing forest. We are in the process of that. So probably at the beginning of next year or the end of this year, we could have a portion of that done. And we are analyzing other alternatives in order to decrease leverage as we wait for the prices of pulp to go up again next year, probably. But we have some plans for diminishing the leverage. And also we have the equity contributions that will come this quarter. The fourth quarter will receive $450 million more. So if you take into account the hybrid effect plus the equity, will mean about $850 million of decrease in debt, net debt for that reason. Of course, we will still be spending CapEx, and that will cause debt to go up. But we are managing sale of forestry. We are also analyzing other alternatives to dispose other assets, and we are doing the planning of the receivement of the equity contribution from Copec this year, at the end of the year, 450, and next year probably the other 450. So we have alternatives to manage the leverage as we wait for the EBITDA to increase in the coming 2 years.
Thank you, Gianfranco. Next question from Cristóbal Meri from BTG. Hardwood prices has been gradually showing signs of recovery. In your view, what's the main driver behind this, and what do you expect for the year 2026?
Well, I guess the main reason that we have increases from a little bit less than $500 about 3 months ago to 540 is that we reached the bottom of the prices. So in that sense, the market has reacted and started to buy more volume. That created a little bit of pressure to producers to increase prices. We had a couple of $20 increases and then a $10 increase. Um, I think that should change when we see more, let's say, curtailment in supply. So prices are still low, and a lot of producers, especially in the northern hemisphere, are losing money and burning cash. In short fiber, also in long fiber. So I think that they will start to adjust uh, the production during market downtime, and that could help give a little bit of momentum to short fiber prices and long fiber prices. But we don't expect that to happen soon. I mean, we will still forecasting that probably next 2-3 months we will have more stable pricing. But we have to see what happens with the global economy and all the situation with tariffs. The demand internally in China is good for tissue and other paper grades, but still we have to wait a little bit more to see some curtailment of production in order to see more increases in prices. The other aspect I think to monitor is the fiber cost in China. The cost of wood has been increasing a little bit because of some weather conditions, and that could bring up some relief in terms of lowering a little bit the demand, the supply from China. But that is only because of some weather conditions, not really of some structural change. So as a summary, we have been seeing some increases in prices. We're still low, but I think it's very difficult to see prices going down from this. But also we have to wait a little bit until we see some pressure to increase prices.
Thank you, Gianfranco. The next question is, given the U.S. tariffs, is there a possibility that the OSB or Sitaguara project could be affected or suspended due to economic and or political factors?
No, no possibility. I mean, both projects are like 65% advanced. They start producing in next year in June and July. And in the case of OSB, the main market will be the Chilean market. So it's nothing to do with exports. We're not going to be exporting to the US. In the case of Mexico, it's also for the local markets. So we don't expect any impact on those projects. That's very well advanced, and we continue with those. And we don't expect a big impact in the projects because of tariff.
Thank you, Gianfranco. Next question is, could you share more details on your plans regarding port access on Sucuriú? Are you considering a partnership with a public port or evaluating other alternatives?
Well, our plan is to build a terminal in the Port of Santos and have the railway access to get there directly from the mill. We are studying a partnership with privates in a place in Santos that we already almost selected, and we have everything arranged. So not in a public port, it's a private port. And we are looking for partners in order to finance part of the investment of the ports plus the rolling stock. And that's our idea. We are advancing anyway in the permits and for the railway from Inocencia to the mill. That is a 47-kilometer railway, and also advancing in the negotiations of the wagons and the locomotives, and doing all the engineering and the permits for the project of the terminal in the Port of Santos. And while at the same time, we have been negotiating with potential partners in order to share the capital investment of that project. We haven't decided yet, but that is still going, and probably in the next, I will say, 3 to 4 months, we'll probably have a decision on that.
Okay, thank you, Gianfranco. This concludes our Q&A session. And at this time, I would like to turn the floor back to you, Gianfranco, as always, if you had any closing remarks.
Okay, thanks everyone for attending the call. This time we had to do it a little bit differently in the Q&A from Teams, but we would like to have another conference call probably in the middle of March with the end of the year results. So, and as usual, in the meantime, if you have any doubt, just reach our IR department in Chile. Thanks, everyone.